Right. So if we look at the markets about 41 points higher. On that note, let's welcome our next guest, Mayuresh Joshi, fund manager at Angel Broking. Mayuresh, good afternoon. What do you make of the market moves? Has the time come to sell mid cap or just ride the good run?
Afternoon, Pankaj. Again, I've always been of the belief that valuations and a bottom-up approach is very, very critical in any market condition. Having said that, what you're probably seeing at this point of time is more to do with expectations of good monsoon panning out over the next 2 months, implementation of GST on the domestic front, continuation of policies by the centre, some revival in corporate earnings, and the capex cycle getting revived. On the international scene, you're probably looking at the Fed not increasing rates, and probably the Brexit fears that one was talking about have been brushed aside by markets, including ours. So that is probably taking the markets higher. The sentiments probably become a little bit more clear at this point of time, or much more positive in that sense. So again, I think the moment in the markets from a short-term perspective is not ruled out. But again, I think from a stock picking perspective, I think it has to be a bottom-up approach where valuations are still reasonable.
Right, bottom-up approach. Mayuresh, give some stock ideas to our viewers.
No, one really has to be very, very selective, as I was saying at this point of time. So if you're looking at sectors per se, my entire thesis moves around the moot point of consumer discretionary spending going up because of good monsoons and the pay commission recommendations coming through. What this probably do is drive volume growth for a lot of consumer durable companies, for a lot of FMCG counters, and that might have a wide gamut of stocks and sectors. So I think paint stocks is something that I'm extremely optimistic about in terms of repainting demand going up, specifically on the rural side in terms of the drought that we've witnessed over the last 2 years. Two-wheeler sales, specifically the entry-level bike, should see some amount of growth going forward. And
within paints, would you like to give us one counter, any one which you think is better positioned?
Now, again, out of the large cap names, again, I think the market leader in the decorative paint segments is something that I'll be looking at. Clearly, I think one needs to understand that valuations are not cheap at this point of time, and it's again a perspective of what you're looking at. So it's the volume growth offset picture, again with price realizations that will probably offset the increase in EBITDA input costs for these companies. So I think the EBITDA might get constrained in terms of margins, but again, I think the volume growth should sustain that aspect. So I think you need to have a look at these sectors. I think my own sense is though valuations might be a little bit expensive for a few stocks within these sectors, paints, two-wheelers, consumer durables, I think it still makes sense because with increase in pay commission recommendations coming through and good monsoons, the volume growth can be anywhere in excess of 2 to 3% over the next 12 to 18 months.
Consumer durables, what would you pick?
So a whole host again, I think if you're looking at the white good players, I think you've got a whole host of air condition manufacturers, air coolers, you've probably got a whole host of FMCG companies. And again, I think the competition there might be intense, but my own sense is that the market itself is so large and it's so underpenetrated with increase in your distributor size going forward, minimal capex that will probably come through. And if you pencil in a little bit of ad increase spends coming through and the promotional spends going up, my own sense, as I mentioned earlier, I think the volume growth should be quite stupendous. A whole host of these companies have actually seen FY16's volume in terms of comparative years over the past few years being very, very muted. So in terms of good times coming through, you will see a huge bump up happening.
So would you advise our viewers to buy across the board in these bands? I mean, what is looking relatively stable, something which is likely to, I mean, let's take air conditioners, for instance. You mentioned air conditioners. Which one would you buy which you think is the best position to take advantage of the extra volume growth?
Again, I think one really needs to understand that the air condition market is highly underpenetrated in India. I think there is huge scope for a whole host of air condition players. But again, I think if you look at the balance sheet inherent strength, I think what I've always liked is a company like Voltas, where my belief is that the market leadership position should probably hold on. The unitary cooling solutions has done exceedingly well for this company. What you've probably seen from the other part or the other segment of their business which was struggling, I think a whole host of legacy orders probably coming to an end. You're probably looking at increased traction in terms of execution happening specifically from the Middle Eastern markets. So within the AC market share, I think Voltas is expected to probably maintain and start gaining market share over the next few quarters, and earnings should respond correspondingly. So Voltas again is something that I'll continue to like. I continue to prefer and remain optimistic on its earnings.
All right. I also would like you to give us a pick. From what you're saying, it seems like you would also bet on the smaller durables, not air conditioners, things which cost between 1,000 to 5,000 rupees. Kitchen appliances and things like that. Would you bet on them?
Again, I think with the entire pay commission recommendations coming through, I think the lower end of value addition products are going to see a huge amount of pickup and pent up in demand. So you can pencil in stocks like a Bajaj Electrical, for instance, which in my opinion has fared poorly, specifically in terms of how their business lines have performed, specifically the NPF segment. And again, I think you see significant traction happening on that front in terms of order flows coming through. The consumer durable businesses, EBIT margins should hold up pretty reasonably over the next few quarters. And again, I think the general earnings trajectory should start picking up. Again, I think there is a huge space out here. So I think it's lighting equipments. You're probably looking at battery players, specifically the torchlight segment. I think these segments should do well.
So something like Eveready.
Spending cuts. I would like to comment on that because I think Bajaj Electrical is something that I'd like to remain optimistic.
All right, okay. Pankaj, you have a few questions.
Right. Mayuresh, something like a M&M Finance we've discussed earlier, you said that one should play it via the rural play. If rains are good, it could do well. But I mean, it's done particularly well. Even we don't know whether rains will be good now or not. At 350, would you be a buyer at M&M Finance?
Again, Pankaj, I'm very, very conscious and cautious about valuations. And if you look at general themes, specifically on the NBFC rural financing part, which includes a company like M&M Financial, I think the asset quality deterioration has been quite sharp over the last few quarters. Would it imply that with good monsoons coming through, the pain probably starts subsiding? Yes, I think the pain will start coming down. The excess provisioning that they're probably doing with the shifting of buckets from the 180-day provisioning norms to 150 and later on to 120, I think that is having some amount of an adverse impact in terms of their provisioning ratios probably going up. The asset quality probably has deteriorated, but with good monsoons, expectations of good collections expected to come through, the markets probably have factored in with the kind of price increase that we are seeing in the stock of good recovery coming through on the asset quality and that emanating into an earnings recovery. But is that earnings recovery going to be a V-shaped one? My take is that it will take at least a couple of quarters for that to start showing on the balance sheet. So yes, I think investors holding on the stock can definitely hold on to the stock with the expectation that the next 2 months, I think the monsoons are in line with what we had estimated, and the recovery should be quite stable and reasonable in the next coming few quarters for a company like M&M Financial.
And something like an oil marketing company, IOC, which is done phenomenally well, but still the appetite seems to be high.
And again, I think this is a general trend, right? I think people are finding out stocks and sectors from a cyclicality perspective. I've always liked this sector over the past few quarters. I think I continue to remain optimistic on this sector, not on the premise that the subsidies are out, probability of their earnings improving, but it's the general concept of marketing margins actually putting and pushing through the earnings in the next trajectory of growth. So what you've seen so far over the past few years has been expectations of growth, but with the subsidies going out of their book, with working capital constraints no longer remaining in hurdle for the companies, debt coming down slowly and steadily, expectations of GRM remaining extremely stable over FY17, not expecting too much in terms of inventory losses probably coming through. And again, I think, as I said, with auto fuel margins and marketing margins expected to inch up, the earnings gets upgraded with every earnings upgrade that you probably see on this front. So again, I think I remain optimistic on this space as a whole.
Right. Mayuresh, thank you so much for joining us here this afternoon. Just before we go into a break, just wanted to highlight ONGC. ONGC is up about
1.5% in the last 10 minutes.
Right, so it's up total of 4%.
Yeah.
So let's just pull up ONGC. It's up 4%. It's one of the heavyweights on the Nifty, but still markets have gone down. Markets have not really responded to ONGC, but 224, 225, that's where ONGC is. Looking in strong and a very, very sharp spike coming in the last 5 to 6 odd minutes. Taking a break, coming back in 2 minutes, 10 minutes remaining for markets to close.